All right, so today I want to go over our trades today. Today was a super tough day. So I want to go in, show you guys what we were struggling with, why it was difficult, what I was watching for, how I was identifying trades, and more importantly, how did I finally get and call out this rather large trade here to the upside. So when you see a day like this start to play out, okay, obviously hindsight's 2020, right? You can look at this after the fact and go, man, that's a really rough market. Like when it finally does break out, it's a very sketchy breakout, right? It breaks out, it comes right back into the range for about 20 minutes, and then it decides to sell through just a little bit. Nothing crazy. Um, this is deduced by low volume. James, how do I know if the market's low volume? How on earth do you know? Again, hindsight's 2020. Would I have loved to have just been like, yeah, let's call it in the first 2 minutes? Sure. So we identified it was low volume right around here. I want to show you how I identified that was low volume. So what that means is I come over here to see I'm on NQ right now. This is NQ on the 5 minute time frame. Come over here to QQQ. Change it to the volume footprint chart. It's going to show us the volume for each 5 minute candle. Now, 1.06 on the tape right here. You guys see this 1.06 million or on the actual volume for this tick chart. That's low volume. That's low volume. Just numerically, this is low volume. I know QQQ's numbers because I trade it every single day. I watch volume every single day. This is something I go over with my students in the live community. I'm like, hey, this is low volume. This is good volume. This is high volume. We shouldn't end up seeing a bigger move. Like yesterday, we had a large move, right? We entered in shorts the previous day for roughly 256 points to the downside yesterday. And that was because that opening volume, the opening candle, was 3 million on the opening candle. So I told everybody, right? We started out yesterday with a loss and we ended up getting into shorts right here. And I'm like, dude, I'm confident in this. And I told everyone, I said, as long as we stay below 25,182 and 25,208, let this trade breathe, let it do its thing. We were covering profits here, a lot of profits, just because we started out with a loss, sadly. So we're trying to recoup some of the loss and be green on the day, secure the fact that we're green, and then let those winners run to breathe. But I deduced that this trade, I said, hey, as long as we can stay below 182, we're golden because of the high volume from the first candle. The high volume from the first candle is what was telling me this is more than likely going to be a real move. We're more than likely going to see an aggressive breakout versus today, where we have this opening candle with 1 million. So that's 30%. It had 30% of yesterday's opening print volume. This is telling me the market is more than likely going to be choppy. Now, this 50-point trade you see here, this was based on a technical analysis break of pre-market, in the pre-market at my level. I wrote out on the watch list. I'll take a screenshot and put it right here. The watch list we had for the day, this was the breakout level. So from the breakout level, it was 50 points. In the pre-market, I'm like, yeah, this is beautiful if you're going to be answering for calls here. And then from the actual call at the open, it was only about 30 points when I called it out. But regardless, ends up coming right up to my level, 25,103, rejecting, coming back to the entry. Now, in this situation here, not necessarily red flag, because I'm telling myself, hey, technically price respected my level. It pushed straight to the upside, straight to 103. I mean, look at my level. That's to the T, respected that to the T. And then rejected it. And now it's coming down through the order block with some momentum. Now, this is where I was a little bit, I was trying to be a little bit careful because I'm telling myself, well, if this is going to sell through, it can be a pretty overextended move, right? If I let this actually approach 25,010 and try to take an entry for 25,010 at shorts, it can be a little too overextended by then and the move can be ruined. And then I'm just chasing shorts at that point, which I hate doing that. I hate being the sucker that's chasing the trade. I usually like to get in at the beginning of the move by identifying that order flow. So when I called out this entry for shorts, I said, look, we're going to get in. I'm getting into shorts now. I said, but these profits are going to be shorter lived simply because when I'm watching this, the entry was actually more so up here. I was doing an example earlier. We ended up trimming this at 17 points profit. And I said that because as we started to slip this 4-hour key level, I said we have to scale out at this 4-hour key level because it's showing me reversal. It's showing me signs of a reversal. It's not the high volume I want to see. We were confirming the volume was low. The volume is about, I think I said, volume is around 980,000. Candle's about to close. This is low volume. I'm not the biggest fan of this. So that's why we scaled profits, and that's why we moved our stop loss to entry. Now, this trade obviously ended up coming back to entry. And the worst part about this is, if you're a trader that's like a stickler, like I will wait to see 20 points or 30 points before I trim anything. That could result in a loss, obviously. That could just be a loss. Now, on this recoup to the upside, right? Around 25,060. This is where, because I had a Palantir trade. So this is where I'm telling everybody, I'm like, look, you can enter here if you'd like. If you're going to go for longs, this is a spot to go for longs. This was able to push for another 48 points, which was 2 trims for us, right? Scaling out around 20 points and then scaling out again around 45 points. So again, scaling out at the order block and then scaling out at this key level. James, why are you scaling out at these levels? Well, it's because these levels are pivot points. And pivot points become that much more important when volume's low. Because if I have a strong key level, I have price, this key level is the pivot point. Let's say this key level has 2 million in volume. There's a wall sitting here of 2 million in volume, okay? Price is coming up to that pivot point or that key level, but price has low volume. Candles only got 400,000 in volume. Do you think it's going to break the key level and continue the trend or continue the move? Probably not. That's probably not going to happen. So that's when your trades become more shorter lived. When you've identified there is low volume, but you find yourself in a trade, that's okay. We just shift from an offensive trading style to a defensive trading style. Defensive meaning I'm taking profit sooner. I'm scaling out of more of my position more upfront. So instead of selling a quarter of my position around 25%, another quarter of my position around 50%, and so on and so forth as the trade starts to play out, when I've identified, hey, low volume, tricky price action, it's not breaking the range, it's staying within the range. So there's an odds are if I'm taking a breakout in the middle of the range to the upside, odds are when we hit that upside move, it might reverse again. And since I'm not trading the reversal because I've already committed to this breakout, I have to keep that in mind. Maximize the most I can out of this trade. What does that mean? That means selling the majority of your profit at the pivot point. So with this being the pivot point up here, prior to taking this trade, I said we should now be looking for really around 40 points full exits. So we reached that full exit. I usually do like to leave a runner, so I did treat it as such. And I said, look, even if you have 10% of your position left, you sold 90%. We were just going to go for the next level. Obviously, we did not get that. Price reversed again, came back into the range. And then I did mention once that candle closed here at this order block, I just mentioned how weak it was. It's not like I didn't like signal to get into shorts or anything. I just said it's looking really bad. It's looking like the market wants to do basically a completely full reversal. Sure enough, that's what ends up happening. At this point, I was not looking to take any more trades. I was just simply giving some trade ideas. So all this was a trade idea here. These 3 trades were actually trades where I said I would trim, stop at entry, I would trim, stop at entry, and I said I would trim, stop at entry. So it would have been pretty unrealistic for anyone to have actually sat through this just because of those pullbacks. And I was encouraging having the stop loss at entry just to avoid dealing with any of this nonsense. So these could have all very well have just been roughly like 20, 25 point winning trades with stops at entry. Now, the important part, right? Coming to this trade, okay, like what on earth was I looking at? What was I, shooting for? And again, I'll put the little screenshot of the trade ideas updates where I posted this ad in my community. But what I told the students before I got off the live, I said, all you really can do is look for breaks of structure. Okay, when you have market consolidation, you have to wait for a real break of structure that's supported by strong volume. Okay, so as I'm watching this play out, again, if you don't have a footprint chart, you can use just your normal volume indicator down here. I don't like this because it's pretty piss poor volume, but as you can see, look here in the bottom right where my mouse, oh, my freaking face is covering it. Okay, well, you can't see it. I just realized my face is covering it, but bottom right of TradingView, this platform is TradingView, so if you have TradingView, you know. Your volume bars right here, there's a number at the very bottom right, literally where, like, right here on your charts, where my hand is. This is where on your chart you would see a volume number. And as you shift the chart to the right and the left, you'll see that number change. That number, whatever it shows, is that current candle's volume. So NQ, it's pretty low. It's always around like 2,000, 3,000, 5,000. But I'll tell you what it was, okay, what we were looking for on this actual breakout. So this breakout here, where it actually breaks the large daily level, it actually broke above. This is where it first drew interest. James, why did that draw interest? Well, look, that candle's volume is the highest volume of the day. So now I'm sitting here going, wow, this has more volume than the opening print. We're actually probably going to get a move out of this. So that's where I start paying attention. Can I see into the future and time this breakout and get into it? No, right? Especially on a day like this, it becomes very difficult unless your game plan was, hey, I'm going to take a break and retest of 25,055. Obviously, hindsight's 2020. That would be perfect, but not the case, just being realistic. So watch this high volume breakout take place. Now, hard part. Okay, where would I find an entry? I've determined that the market wants to move. It had a high volume breakout and it's in the upside. The market has chosen the direction for me. I don't have to do any guesswork. I want to shoot for upside plays, but I'm not taking breakouts because this is how you get losses or really tiny wins. What I need to do is look for a pullback into a key level or an order block in order to take that entry. So this is now where I'm watching this play out, and I'm telling myself, when this red candle closes here, when this red candle closes, I go, okay, now I need to attach a timeline to this because I'm not trying to sit here forever. So I say, in the next 5 minutes, when I need to see, I have to see us get a strong candle close above 25,103. I said, if we close below 25,103, I'm just going to walk away. I'm not going to mess with this. If we can close above 103, I'll keep watching. What I want to look for is a retest entry around the daily level. That's what I told myself would be perfect, around the daily level. So I said, if we get a rejection, but we can still hold this range, I will be interested and I will look for an entry at 25,114. What's the beauty of entering at 25,114? Well, the beauty of that is I can take an entry, rock a 20-point stop loss, okay, because that would bring me down to 94, being my stop loss of 20 points. Also, that would allow 25,103 to form as my shield for my trade. What's significant about 25,103? Well, it's the level I had this whole time. I've had this for months. But 25,103, I can see we rejected right there at the pre-market, and then we rejected 2 times, 3 times, 4 times, 5 times. So we rejected that level 5 times in the trading day, all within the first 2 hours. So I can sit here and look at this and go, strong level. If we get above this, I'm going to use that as my shield for my trade. So I can place my stop well below that. Let this play out. Okay. Now I'm not taking my entry all the way up here and placing my stop below this. That doesn't make any sense. My risk to reward ratio gets cooked if I do that. I need a risk to reward ratio that makes sense. Hence the entry right there. Okay. So as this plays out, post it for the community if they want to get in on this trade for the chat as well. And just let this thing play out. Let it rock and roll. What are my parameters when I'm taking this trade? Well, ideally, I do want to pay attention to that closest level. So from 117 up to 38, that is 20 points, roughly what I was looking for the first trim. So that plays out well. That bodes well. Just want to let this trade rock and roll from this point. And then as you can see, we kind of ride this all the way up, but same thing, right? Scaling out appropriately. As you can see, 50 points. What does that line up with beautifully? The next level. What a coincidence. And then we shoot for 80. I ended up trimming it a little bit early at a 77. I didn't quite wait for 80. And then we shot, and then we got 100 points on the next trim. So I was going for 91, but it just blasted through, and we got 100 points. The reason I was going for 91 is because that was that 4-hour key level. So, and then the next one, what a coincidence, guys. Look where it rejected. My order block. Twice in the day. Absolutely rejected this. So I'm not the biggest fan of doing these videos because I know there's trading gurus that are garbage and don't know how to trade, and they're going to copy my levels. I've already seen that happen, but luckily people know my levels, so they know who's copying who. But the beautiful part about this is that rejection, right? It's absolutely gorgeous. Literally, that was our peak profit. The last trim was at 144 points. And then that's when it decided to reject. And what did it do? It just channeled between my order blocks. So even though it's a rough day, I said it in the live trade as well. I literally said it in the live trade because I just bugs me, when people kind of give up because they see the market opens a little rough. So they're like, oh, this day's trash. I'm like, look, when the market opens rough, it just cleans up later in the day. That's the only difference. It's very rare that you consolidate all day. But if you've identified the market has a rough opening, the market has low volume, just shut it down and come back later. Shut it down. Just watch to see if it breaks the range. Breaks the range, boom, come back in, check it out. Read the volume. If you can't read the volume, don't come back at all. Because remember, if I couldn't read this volume, how would I have known that this is a real breakout, right? If the volume was low on this and it did break out, to me, it's an exhaustion move. It's going to reverse. So I would never try to take a break and retest to the upside. So it really is heavily dependent on how the volume plays out with the correlating move of that underlying asset. But when you see a channel between the range, that's just goes to show that much more like, okay, my levels are legitimate. My order blocks are legitimate. Everything has legitimacy here. It just needs proper volume in order to get out of a range. That's all we really need. So, and again, with volume, anything is possible, guys. The biggest trades I've seen in my life, it's because there's volume, okay? This 4-hour key level, that's a very stubborn level. 25,209 has been a very stubborn level in the past. Why did we break through it? Well, look at that candle right down here. What a coincidence. It's super high volume. Makes sense. There was high volume. That's the only reason we broke through that trade. So this is a friendly reminder, though, right? If you got tough days like this where your wins are just super small, almost non-existent, suck it up. Suck it up. Get over it. Get over yourself. Stop thinking you deserve these massive trades every single day. Lock in, take it seriously, look at this and say, look, the market doesn't care about my feelings. The market does not care about my percentage profits. Okay. The market does not bow to you. The market does not conform to you. We conform to the market. Just think about it as like the ocean. I don't care how tough you are. I don't care how smart you think you are. I don't care how rich you think you are. You need to conform to the market. You need to adapt to market conditions, and you need to be able to change on a dime. You can't do that. Day trading is not for you. Please go find something else. This profession is incredible. This career is incredible. I think it's the best thing you can do on the planet when it comes to regaining your time back, the whole sense of freedom. But if you're not mentally tough or you're not disciplined or you don't have the proper drive and willpower to do very simple basic tasks, this is not for you. Okay? Because what would the simple basic tasks here be for today? All right. Let's say you were struggling and you took a loss right away, and then you start seeing that volume's low. Probably just best not to trade. That's what I'd probably say. Look, this does not fit my A plus parameters. I've already read on the day in the first 20 seconds. I'm already read taking my breakout level. Let me just call it here and come back later when the market cleans up. And then all of a sudden, when you come back, hey, what a coincidence, the market has cleaned up, right? Like, even if you think about this, if you were looking for a bounce of my 4-hour key level, what do you see? Clean move to the upside, technically. If anyone was looking for a bounce, I mean, that would have been the trade of the day, right? If someone identified this bounce level. But you can see a clean move. Bounces from the 4-hour key level, comes up to the next 4-hour key level, bounces again, right? Comes up to the next level, bounces again, bounces again. Like, it's a healthy move up, technically. So yeah, it's just something to think about. So, but that's the beauty of learning to read volume properly and identifying proper price action and not getting all in your head and really looking at things from an analytical point of view. And also taking advantage of these massive days like this. When you can take advantage of the massive days like this, again, let's say I had a loss and a loss today, it wouldn't bother me in the slightest because I'd be like, well, yesterday I got a 250 point trade. Okay. And let's think realistically, what would you have actually realized in this trade? Net ROI, right? Probably on the low end with scaling out a good chunk around 45 points, you're going to be sitting somewhere between 80 to 120 points profit on that trade as your net ROI. So even if you did, let's say you lost 20 points and 20 points, the previous day you had a net ROI of 80 points on the low end, you're still heavy in the green just between those two trading days alone. Not even I'm not even including I'm not even including these 2 days with these amazing trades. I'm not even including those, right? That's I'm sorry, these two right here. That's Monday and that's Tuesday. I'm not even including these two. Okay? Literally beautiful. 127 points, 164 points, 300 points. I'm not including those at all. So that's where you really just have to zoom out, look at things from a big, overworld view and objective point of view. Again, remove yourself from your feelings. Get your head out of the gutter and really focus on like what is the market actually doing. Let me read the market for what it's doing. Stop worrying about my P&L. Stop worrying about my drawdown. Stop worrying about my options account. Don't worry about what I'm doing at 12 o'clock. Worry about this in this moment, in this time right now. What is volume telling me? The sooner you can start to lock in on that and really take that seriously and do a deep dive in your journal entries, refine the strengths and start to steer away from the weaknesses, the sooner you're going to become a profitable trader. All right. So hopefully that provided some good value for you guys. Again, there's multiple tools to read order flow. Again, I just use volume footprint because it's literally on this platform, so it's really easy to show you an example of. Volume footprint, you can use order book level 2 time and sales. You can use volume session profile. You can use book map. Those are pretty much the main core of what I would use to read order flow. Deep charts, anything else, someone's just really trying to sell you a course. If they're trying to tell you like, you could have used the MAs, blah, blah, blah. Stay away from the lagging indicators. Stay away from those. Those are great for long-term stuff. Like if you want to use a 200-day EMA for long-term investments, I'm a big fan of that. Those work great. If I want to use them for swing trades, I'm a fan of that too. That works great. When it comes to day trading, the market open, the first hour, you're going to find the EMAs and a lot of these other lagging indicators, Fibonacci retracements, all this stuff to be very inferior. 15-minute orb, that's a complete trash concept. I would just stay away from that altogether. Focus on reading the volume. You focus on reading the volume, you're going to start reading price happening within the candle. That's where the sweet spot is. That's where you're going to find a lot of these more accurate entries, finding good levels. You can use the volume session profile to identify order blocks and levels. So I'll slap that here at the end of the video, the key level video, if you guys want to watch that. All right. Crushed it this week. We did really good. Everyone else that's trading, wish you the best. You guys got this. Just stay locked in, stay focused, keep your eye on the prize. right? Why you started this in the first place. 1% better every single day. You guys have a blessed one. See you in the next one.